I'm here gathered with esteemed panelists here. I wanted to let you guys introduce yourselves, your firm, and what you guys do, and how you think about macro. We have a diverse set of participants here, and I think we're going to have an interesting conversation. So, Matt, why don't you kick us off?
Yeah, absolutely. Delighted to be here. Good to see so many familiar faces. Matt Hougan, I'm the Chief Investment Officer at Bitwise Asset Management. We're a $6 billion crypto asset manager, both in the US and Europe, with a focus on ETFs, ETPs, index-based products, although we do have a small active arm. And I spend, all day talking to people about the macro case for Bitcoin, and thinking about that as well. So really excited to be here.
Hello, my name is Shiliang Tang. Thanks for having me, and happy to be here. I'm the co-founder and president of Arbelos Markets. We're a principal trading firm focused on derivatives from bilateral OTC to DeFi. Previously, I started and ran a hedge fund called Ledger Prime. It was like a multi-strategy hedge fund. And yeah, looking forward to talking about macro.
Dan Tapiero, 10T Holdings, One Roundtable Partners, and now Zenrock. We're a private equity fund focused on the growth companies in the space, also very active in the secondary market, special situations, and now we're operating that third company, Zenrock, which does decentralized custody, amongst other things. We're rolling out our Zen BTC product, a decentralized, wrapped, yield-bearing Bitcoin. So that's a new thing for us. Was in the macro hedge fund business for 25 years, so I know a little bit about macro, and hopefully combined the two here in this panel. So happy to chat.
Dan, let me ask you the question: how do you make the case for Bitcoin in a macro environment? What are the things? What are the factors?
Well, I think. Look, there are a million things, but the bottom line is you talk to a traditional investor, and their equity, and they have a traditional investor 60-40 or 70-30 or whatever it is, and you tell them, look, the Nasdaq has been a great performer over the last 10 years, right? So if you were long Nasdaq the whole way, let's say 100%, you're probably pretty happy. Then I say, you realize that if you'd been long Bitcoin instead of the Nasdaq, the performance would have been a lot better. And they say, well, how much better? Well, Nasdaq is actually down 99% against Bitcoin since 2010 or 11, roughly. So then they say, well, why is that, right? And I think that starts the conversation because it's not down 90%. And in fact, all assets in the traditional world, every single one, a bond, stocks, commodities, any asset in the old fiat world has essentially declined that much against Bitcoin, and frankly also declined that much against Ethereum and Solana and many of the assets in the digital space. So if you're a portfolio manager like me and you care about performance, all of a sudden there's a little bit of a light bulb that goes off. Yeah,
That's a similar question.
But, yeah, completely agree, right? I think like all assets, obviously since QE 2008, have experienced just massive asset price appreciation, right? But then if you normalize that by G4 balance sheets, it's really only Bitcoin that's kind of outperformed, massively. Like equities, for the most part, since until like recently, has been flat. Global currencies, many of them have been down. And then you couple with the fact of just how massively positive skew from a distribution perspective Bitcoin has been historically. It's weathered like many drawdowns, many geopolitical events, and then when it's risk on, like a bull market, it's the fastest horse out there, right? And now we're entering a stage where Bitcoin, outside of just the fact that the correlation of it is very low against other assets, the volatility of it actually is coming down significantly, right? Every single cycle, we've seen realized volatility of Bitcoin come down. Like, if you told me that Bitcoin right now is sitting at all-time highs, right after the presidential election, and like implied vols are like sitting at a 50, I would have said like, it's crazy, right? Like 2 years ago, 3 years ago. But like now it's trading like a tech stock. And so, that coupled with just the unique nature of what Bitcoin stands for, I think like it has to be part of any global portfolio allocation.
Yeah, I would just build on it. We sort of covered the outperformance case, the portfolio case. Maybe to round it out, I'll talk a little bit about the risk case. I spend a lot of my days talking to family offices, wealthy families, financial advisors, small institutions. And if you're a wealthy family and you've made a big chunk of money, you're not going to spend yourself into poverty. And if you don't make stupid investments, you're not going to invest yourself into poverty. Your only risk, your only real existential risk, and we hear this from people, is massive inflation that eats away your wealth over time. And so that to me is the risk case. And we see those clients all the time adding 2, 5, 10% allocations to Bitcoin to hedge that risk out of their personal outcome, even independent of the returns that Dan mentioned, which are very true, and the portfolio impacts, which are very true. I also think there's this hedging impact that is also true for many people.
There is a risk diversification benefit to this asset, though. It is low correlations to most other assets. Is that a consideration, or is it that they don't want to erode the wealth they've already made?
No, that's a huge consideration as well. And I know people throw out these questions about is it, how low correlated is it, et cetera. If you just think about it from like a 30,000 foot view, does what drives, Kraft Heinz drive the price of Bitcoin? They're completely different drivers. So of course they're low correlated over time. And I do think that appeals to people from a portfolio construction perspective too.
Shiliang, anything to add on the kind of the arbitrage side? There's some unique features that that are diversifying that.
Yeah, I mean, I guess, I come from a more like very liquid perspective, right? A couple of things. Like one is like, it's still, even though like, it's become much more institutional, it's still an asset class with just massive edge for trading firms, right? And that's why we see so many spin-offs of very, very talented teams from the top firms like Citadels and Jane Streets and all these like traditional firms that they still want to get into crypto and they still want to trade this asset because there is still a ton of edge, right? And that doesn't really exist in many of the other asset classes. And so that's one like observation. The second part is there are like very structural like behaviors in this asset class that cause and create these like structural like opportunities. A lot of it is due to regulatory arbitrage and the difference in regulation, the cost of capital across different borders, how assets sit across like different custodians and platforms. But just speaking to like all of our counterparties, it is still like the single asset that still can generate consistently year over year, like very, very high sharp returns in like the 50 to 100 like percent returns from a very liquid trading perspective.
Dan, how do you think about risk in the VC?
About
context?
how what?
Bitcoin's risk or crypto's broad risk or diversification benefits in the.
Well, I mean, I think the real risk is not to own any. And I think it's easy to say to somebody, look, something's obviously going on in this world. There's that mantra, put 1% in and dip your toe. And I think that's been the benefit of the ETF, even though I personally, and many of us in the room, wouldn't necessarily own an ETF on Bitcoin. For a lot of people, and certainly institutional people, it's a great place to start. And I think after certainly after a little bit of price action and following it more closely, they then realize, oh goodness, this is a whole world here that's growing up. There's a lot here more than just Bitcoin. We can, talk, RWAs and stable coins and NFTs, and there's an entire world and many use cases to come as well. So I think the risk is not to have rather than, right? Because you can always do a small amount. That's another way to manage your risk.
Yeah.
Yeah.
Matt, you talked to a lot of diverse types of investors. What has been the hurdle for them to invest in the past? At this point now, we have ETFs. You can buy this with a click of a button. What are the objections that you tend to hear from investors that?
Yeah, historically there were two, and they've now been defeated. One was it was hard, which I think we overlook when we're crypto native. But if you're a traditional investor pre-ETF trying to allocate to the crypto space, it isn't that easy. right? And what that means is you have to have a high degree of conviction before you're willing to allocate, whether that was doing it from a self-custody perspective, whether that was working with a fund and understanding the due diligence factors to ask, whether that was working with a private fund and burying yourself under paperwork. It was just hard. Bitwise offered those services. Other people offered those services, but it was just hard. The other one was career risk. For a long time, you could get fired from a highly compensated position for sticking your neck out for an asset that does have 70% drawdowns. And if you timed it wrong, you lost your job, and that was it. I think the reason we're seeing such an exponential ramp of institutional flow into crypto is because those have been removed. And I do, for what it's worth, I know there are these questions out there. Are we really seeing it? I think the data shows clearly we're in an exponential ramp. And I think it's because we've removed those two issues. I'd add one more, which is related to the firing risk. There's also a great deal of anchoring bias in TradFi against Bitcoin, by which I mean for many TradFi investors, the first time they heard about Bitcoin was a negative story like Silk Road or illicit use, etc. And so they were psychologically on the 20-yard line. And if you have that anchoring bias, it's not good enough to get to 51. You have to get to like 90. And I think the industry has done a lot of jobs sort of recovering from that anchoring bias. I think this election may be the final nail in the coffin that removes that forever. I think those were the three big objections. I think they're gone, and I think we're going to see a flood of assets as a result.
Dan and Shiliang, is there anything that was common in objections for investors in a liquid fund or a VC fund that you guys would say?
Yeah, well, I think that I think you're right, Matt, that I would say we've had, full scale adoption, but the rails have been laid to make it a lot easier. I think in the next sort of 18 months, you're going to start to see companies, and some of the ones that we own actually go public. And I think there's a whole universe of investors that can't invest in currency at all, whether it's an ETF form or not. And there are some very successful businesses in the space, companies making over 500 million, $1 billion in revenue, that could be public. I think that will also bring a whole new wave of investors. I mean, we saw what happened during the Coinbase IPO. I mean, that was brought a huge amount of attention to the idea that there are functioning large businesses and that also could pivot. If you look at what Coinbase has done since 21, I mean, it's been remarkable, right? They had 98%, was it retail trading volume, and they said within 3 years we're 60%. It's going to be 60% or less. We're going to diversify away. So there are businesses out there that have figured out how to pivot and be successful in any market. And I think that's something that institutional investors, they want to invest in a business sometimes, not necessarily in something that can go down 80, 90% every 3 years.
So just quickly add, completely agree, but obviously regulatory clarity and regulatory hurdles, right? A simple example is just like how Basel III affects banks and how capital requirements are the capital requirements for banks holding digital assets, right? Or for liquid funds, how to deal with the qualified custodian question, and which of the assets you're trading are securities and how do you register that. I think the industry has come a long way and the space has improved tremendously in answering those questions, but those are still some hurdles that we still have to get through, right?
Where do you see, Matt, Bitcoin fitting in the sleeve or allocation for most investors? Is it a currency? Is it a gold replacement? Is it somewhere in alternatives? How do you, if you innately strip away the name Bitcoin and you just looked at risk and returns, how do investors square that in?
That's one of the difficulties, right?
It is.
That in explaining it to people, because the deeper you go, you realize that it's actually many different things. Right. And then we're not used to thinking in those terms, right? Is it a commodity? Is it a network? Is it a technology? Sorry, I interrupted you, Matt. But I mean, I feel like the easiest thing to do is is just to talk about and say, hey, it's an investment, and you put 1% in, and then you start doing your work. But that's the real problem. Unlike other assets, mostly, the more work you do, actually, often the more confusing it can be, right?
Yeah, I really like that. It's really true. I think a lot of sort of TradFi people coming into Bitcoin try to create these false binary choices. Is it a risk asset? Is it a risk off asset? Is it a currency? Is it a commodity? And to force you into one bucket or the other. So I love what you said, Dan. I will say from when we talk to investors, they put it in two places. Some people put it in an alternatives bucket, often squeezing their gold position to make space. And some people put it in their high growth bucket because of its exceptional returns. It fits great in either, right? It is an alternative from having a low correlated position. It is also a growth investment with 100% compounding annual growth over the last 10 years. So it does fit both of those buckets. That's what we see people actually doing when they talk about where it fits in their portfolio.
We obviously just went through an election. We woke up this morning to a new future. Bitcoin has been an important crypto and large has been an important political topic. How do you think the calculus changes for potential investors for Bitcoin, for the industry at large, as they wake up and look at their portfolio? Not just seeing the price of Bitcoin up, but now sort of
It's not today what it is. It's next week when it's at 85,000 and 90. I mean, unfortunately, this is a space where the best time to buy, and maybe this is the way all markets are, but it's specifically extreme here given the volatility. But you could be jumping up and down as much as you want in the first half of 23. You might have the best reasoning, the best idea, and people weren't interested. And so in 21, the craziness only happened in January when you broke through the previous highs of 17, the 2017 highs, right? And you went from 20 to 60,000 on Bitcoin. So my guess is, it's been a phenomenal time to buy the last 9 months, the last 18 months. But, people, unfortunately, human nature, they only take notice. And when they have FOMO or when it's on CNBC and someone's jumping up and down crazy, it's like making like proclamations that it's going to 200 or 300 or whatever. So I think that's coming. That's right in front of us. Yeah.
Yeah, I completely agree. I think, just in the past 24 hours alone, or even overnight, the amount of like counterparties that have just piled into at least, let's say the options front in call it 2 to 3 month options with strikes, call it 90, 100, 120K strikes has just been like tremendous, right? You can see it in like the spot markets or the Coinbase premium. You can see it in like the options markets. So everyone's like definitely repositioning their portfolio and deploying capital. And yeah, I mean, I think, generally it's one of the most reflexive assets we've ever, come across in history, and it will continue to be.
Yeah, I think people underestimate the scale of flows that are coming. A stat I love to throw out is institutions own 71% of the Russell 3000. They own, 3% of Bitcoin. It's going to take a long while to get that 3 up closer to 50. I think the big impact of the election is it further removes this cloud, this yeah, but that's stuck in the minds of investment committees that meet on a quarterly basis to review new investments. This just cleared that out. It actually made that more of a tailwind than a headwind. Now it's yeah, but what if central banks start buying it? Yeah, but what if we build a strategic Bitcoin reserve? As opposed to yeah, but what if the anti-crypto army investigates us for putting it into our portfolio? And I think people just miss probably the scale of what's going to happen in the coming year by a significant fraction.
Well, let me just jump in and give you this is a personal anecdote. I don't know necessarily if this were an open venue I'd talk about it, but we have 300 investors in our funds. Okay, they're relatively knowledgeable. Most of them have been in the funds for a few years. Many of them are personal friends of mine. Okay. This morning, of those 300, I probably had somewhere between 30 and 50 reach out to want to talk. I mean, where was it last week, or where was it a year ago, when I was trying to get them more engaged and involved? So it's a perfect example, unfortunately, of how the space works, and they'll end up buying it at wrong prices, and that's their issue. Yeah, anyway, Matt, you were gonna.
Yeah, I just wanted to build on that. The amazing thing about that is that's absolutely true. And there's this other trend that it was happening anyway, right? I mean, if you think about ETFs tend to have more flows their second year than their first year, and more flows their third year than their second year. And so that is just like rocket fuel on this institutional trend that was going. But yeah, if you're getting 50 calls and I'm getting 50 calls and everyone's getting 50 calls, I think that's what's happening right now.
What do you think? We had two seminal events this year. We had the launch of Bitcoin ETFs back in January. We had approval of ETH ETFs, digital gold, the narrative, the idea, the macro case for it can be underwritten. What do you think was lacking or has been lacking in the discussion around ETH? There's been $25 billion of net inflows into the Bitcoin ETFs, and ETFs have shown net outflows.
Yeah, I mean, first I would say that the flows, I would exclude the net outflows because there's so much sort of arbitrage money in ETH that I think outweighed. If you look at the ETFs on their own, they've been very successful in the scale of ETFs. But I think, look, ETH is like the middle child of crypto. It's neither the shiny Bitcoin that's an institutional asset or the cool kid Solana. It's sort of lost its narrative flow. So I like ETH here as a contrarian play on crypto. I think the flows will be just fine. I think we'll look back in 2 years, there'll be $10 billion in Ethereum ETFs, and everyone will be like, wow, these were a big success.
Right.
I'm not sure I exactly agree. I think it's just lagging, and all the little panic players on Twitter complaining that their ETH isn't going up. So I think Bitcoin, ETH, and now Solana are really, they have network effects. They're the three core assets. It's just lagging. That's all. It's markets. Bitcoin's leading, and I think the ETH ETF will end up being just as successful as the Bitcoin ETF.
One thing I would add is just tremendous amount of like interest in Solana, especially again, just since even like last night, right? I think like the narrative that potentially like the Solana ETF will be faster and coming on board, versus a week ago, is definitely a narrative that can take hold of the market very, very quickly. And so, that's definitely something that will also propel like Solana continuously. And
Don't tell everybody that it's just meme coins driving.
I think they're both going to do fine, and I agree that the ETH ETF will do well. I mean, institutions are building on ETH, and meme coins are building on Solana, and they're both seeing the flip of that, with both sides crossing over. I think there's room for both in the world.
There's been this resurgence or idea of Bitcoin DeFi. Is this something that investors are interested in building in? There's staking.
I'd be
services,
interested,
restaking.
Matt. I mean, are investors that come into your ETF, do they ever talk about layer twos or getting yield on Bitcoin?
So no and yes. They don't know about layer twos, and they're desperate for yield on Bitcoin.
Okay, great. I mean,
I'll send them over. I'll send them over.
Absolutely. I think it's a budding area. I think the TVL essentially is of wrap Bitcoin, which moves around on ETH, is I think around 10 billion. Maybe it's a little more. So it's very small. But I think through Base and Coinbase, I think that'll be people's first entry from the traditional world. There's so much going on in this space. A year ago, there was no layer twos on Bitcoin, right? 3 years ago, there were no stable coins, and now we're settling $10 trillion. It's the most innovative, fast-paced area. I think I would call it sector that I've ever seen. I mean, maybe some people might argue AI, but when you just look at what the space looked like 5 years ago, everyone would just complain about their Coinbase account going down. And now it's just, we've mapped out, actually, we think there's 60 different subsectors within this digital asset ecosystem. You didn't have any of that years ago. So
Bitcoin's kind of squarely focused on this digital gold narrative, or at least the investors are making that case for it. It's simple to digest. It's understandable. We already know what gold is. Does this change that dynamic? Do we have to start pitching Bitcoin as in a different light, or is this just?
I think it's just additive.
Yeah.
Right. I mean, I never understood why people didn't build on Bitcoin, 4 or 5 years ago. And the complaint I always heard was that the code was clunky. And so therefore the ETH code was easier to manage if you were a developer. So they solved the clunky problem. That's the amazing thing. I mean, just the number of problems, if you just go back, how many hurdles this space has overcome. So, I mean, that's why also ETH, I mean, as I said before, I think is the rails for DeFi. And it wouldn't be terrible if Bitcoin, added to that, right? I think, yeah.
I would add that, hopeful that the yield in Bitcoin comes more from just like inflationary tokens, like many other, L1s and L2s. But I think I'm more excited about structured products growing in Bitcoin, right? If people are looking for yield, you can get that in DeFi, but you can also get that from traditional institutional structured products. And as Bitcoin increases in price and institutional interest, I think naturally a lot of the traditional institutional products that do exist in other asset classes will continue to migrate over to Bitcoin and crypto in general. And I think that the size of those products are like massive compared to even DeFi today, right?
Jeff, something you want to add? How do you guys think about crypto in different macro environments? We've gone through economic growth. We've had a recession at this point. We've gone through a bout of inflation.
Greg, hold on. We just made an all-time high today, right?
Yeah.
So that sort of de facto means that every possible macro environment, or all the environments that have existed in the last 5 to 10 years, not any one of them has mattered. Right? That's what I would say.
Go ahead, man.
Yeah, no, I think that's right. I mean, when people think about investments into areas, different economic challenges, during different economic challenges, they think about mega trends that can overwhelm those for which the economic cycle is less important. And I think crypto is clearly that, right? It's clearly overwhelmed those trends. That's why we're at all-time highs. That's why it's up 10,000% in 10 years. And I think there's plenty of room for that to run.
We're coming to the close of the panel here. I think there's the way that I would summarize this, or the way that I like to pitch it to clients, is that if you were to invent a new asset that was aside of all the other pre-existing asset options, you'd have for this ideal asset, you have something that have low correlation or negative correlation to other existing asset classes and high risk-adjusted returns. And I think that's literally what you have with something like Bitcoin. So, all right, guys, thank you for attending our panel.
Thank you.
And thank you to the
Thank you.
panelists.
Thank you.